Unpopular opinion, your house is not an asset. If you look at the definition of an asset, really, it's something that generates cash for you or will give you some form of return. Now, think about it. When you own your house, what is it giving you other than the expense that you have to pay month to month if you have a mortgage? In my opinion, if you're going to buy a house and you want it to be an asset, make sure it's giving you some form of cash. Now, I'm not a financial advisor, but this is just my opinion. If you want your house to generate something for you or generate a return for you, what people tend to do is to refinance that property. Now, hear me out. If you refinance the property, yes, you will take longer to pay off the mortgage, but what it does is it releases the equity in the property so you can get cash out. When you get this cash, it's not taxable because essentially it is debt. So you're not going to get taxed on that equity or on that cash that you receive. Now, why would anyone want to prolong the amount of time that they're going to take to pay off a mortgage? Because you want to release the cash, right? Now, does it mean that you will die in debt and have nothing to your name when you die or when something happens to you? No. What people tend to do is just take out a life insurance that will pay off the property when you pass away. Again, not financial advice, but that's my opinion. Take advantage of life insurance policies. When you do pass away, your insurance policy will pay off the mortgage and then your loved ones will still be able to inherit the house. But what has happened during this time, you've been able to take out cash periodically and invest it in other things. Now, do not refinance your property or take out mortgages if you're going to buy something silly or liabilities. For example, you're taking out cash so you can go and buy a car or you can go on holiday. That is not wise. You're just making the situation worse and getting into debt for no reason. Okay, only take it out if you're going to buy another asset. That way you can scale your property portfolio and do the same thing with the other properties. Refinance every few years, and that is how people are making money. Refinance every few years, take the cash that is not taxable and reinvest somewhere else. So essentially you're building your asset base over a longer period of time. You have a lot more than you would have had if you had paid off just that one house. So you don't have to pay off your mortgage. And actually for buy-to-let properties, people tend to take interest-only mortgages instead of repayment mortgages. It just makes sense that way. Your cash flow is lower because of the expenses that you're spending on your mortgage. They're actually lower on an interest-only mortgage. But make sure before you refinance or you remortgage that you can afford the payments. Okay, I'm not advising people to go out there and refinance properties that they won't be able to afford. And the other thing you might want to take into account as well are the early redemption charges. So if you're on a fixed rate, so this means that the bank has fixed your interest rate for a certain number of years or for a certain period of time. Usually, if you try to get out of that mortgage or refinance in that period, you will get what's called an early redemption charge. It can be in the tens of thousands. So just make sure that you know what your early redemption charge is before you exit, or that you're not on a fixed rate. But if you're not, I think anyone should be able to refinance their property. Don't sit on equity. Make sure that the cash is working for you and don't be buying liabilities. Buy assets instead. That way your net worth is increasing. Okay, don't sit on a liability. Again, just my opinion, but a fully paid house is not an asset. It is just a liability. You're sitting on equity that you're not making use of.